Welcome to Cycles TV. This session of the Market Cycles Report is intended exclusively to provide information and education to help individuals better understand cycles and the markets. However, this information is not to be construed as professional advice as to the buying and selling of securities. In no event does the host express any opinion with respect to, or make recommendations regarding, the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading. Buying or selling decisions are solely within the personal discretion of each individual. And now, enjoy the show. Here is your host.
Welcome to the Foundation for the Study of Cycles. My name is Lars Fontin. Once a week, Monday, same time, same place. Let's do some cycle analysis. Today I really have a special subject for you. First, let's have a look at oil price. It's an interesting asset class, so why not have a look at oil in the energy universe? Second, I want to introduce something new, not really new, but I want to combine different cycle analysis techniques, which is new to the area of cycle analysis, as therefore I would call it experimental today. And what I will combine is our classic digital signal processing, so dynamic time cycle analysis, which is our core, what we're doing here. In addition, I will add the traditional Hurst concept of future line of demarcation, which helps us to identify price-based cycle targets. And the FLD allows us to derive different additional information where we are in this time-based cycle. So to combine these concepts, I think it's a new way to look on the chart. And therefore, bear with me, it's experimental, but I think that's what makes this weekly series interesting. The basic stuff you know anyhow, I would assume. Okay, let's jump into it. We are live, so I want to pay attention to your questions. I hope everything runs smoothly today. Seems like I have a little trouble to follow your questions, but I will. Brent, you're already on it. A daily, weekly oil cycle. You're already on it. So continue in the chat section. I will come to this later. Let's start with some daily analysis. First, this is our preferred time frame I want to look into today. So these are oil prices in our cycle analyzer standard setup. I will also use the new features which we have introduced last week. They are pretty basic cycle analysis, so no black box here. We just make it more easy to combine everything for you. So first of all, I have included a longer historical view on oil prices. I will explain it a little later why I'm not using this small amount of data for this analysis. So I've thrown in that case here on this chart, I think over 3,000 bars, so long daily history going back for, let's say, 10 years for the cycle analysis. Because first, I'm most interested in the most dominant historical cycle length, not the exact timing for the projection area. So that's you always need to differentiate. If you want to use the cycle for the best possible projection of timing low top, you should not use this large amount of historical data. If you're interested from an historical point of analysis, what is the most dominant cycle length only, not perfect phase projection to the future, then you can use more historical data. That's what I've done here. And let's pay attention to the spectrum chart and the possible cycles which have been detected here at the bottom. So it's quite obvious we see 3 cycle peaks here. In that spectrum here, these two are quite identical from their amplitude and how the shape looks. They are also selected as dominant ones. This one has a higher amplitude. All 3 have been picked also by the artificial intelligence. So the guided dominant cycle analysis for the dominant cycles. You see on the right-hand table view, they are highlighted with these green background indication. I want to use the longest possible cycle here, which is included in the AI-guided filtering approach here. So this is, in that case, 360-something days, almost a yearly cycle, so some seasonality about a yearly cycle. But I think we're not talking about that. So just picking this cycle will give us the overlay onto the chart. Yeah, and now maybe that's also a more realistic situation, what's showing here. So this looks like now more complicated, that analysis. And by the way, that's why I picked that example to combine now different techniques. So from a pure time-based cycle analysis, let's look at this chart here. So this is the recent top, and we should have passed the possible down bottom projection, approaching the next top. But if you see what price is doing here, it's continuing this slow downward moving approach here. So it has not reached the bottom, but it is also not really moving up by this cycle hangs here. So it looks like out of sync, or at least this cycle is not valid, or the phasing is out of time because I used a lot of more historical data. So you could also switch just to 800 bars, so use a shorter amount of data for the daily analysis. It will look like similar, so we don't get a real clue how to read this current cyclic situation, even if we get a more better fine-tuned current projection regards to phasing using not so much historical data. But I would leave it up to you. It would look quite different. Okay, so let's look a little bit further into that chart here, and let's even zoom out and see some more historical data here. Let's get an idea about how the recent tops and bottoms of this cycle are somehow aligned with the historical past over the 10 years using this more or less yearly daily cycle pattern we have seen here. Sometimes it's very good, sometimes it seems to be off here on the top. So it's a mixed view if you just look at this simple cycle. Yeah? So half of these projections are on, but the other half of these bottom or tops is just off. If you look a little bit, and by the way, if we just, this would not be a perfect visual fit where I would propose to use this single cycle. But as said, that's often the reality. It's not as simple. And if we would use this, for example, to add now additional techniques like the FLD, we would use half of the dominant cycle length. In that case, the dominant cycle length is 360 something, so half of that would be 180. I've just used this to show what the FLD approach would maybe give us in addition. And if you have a close look how this looks now, you also need to pay attention to this bottoming period. So at that point in time, this crossing here, down below the FLD line, this was the confirmation that this top of this cycle length was in place. So we have passed half that cycle length and we have crossed the FLD, which is a confirmation of that cycle and that the top was in place. So this will then start to ramp up a new first downward price projection. So we measure the distance traveled from here to the previous top. And this would give us the downward price projection of that cycle. By the way, if we just hover over that indication or that on the price chart, let me just zoom in a little bit. So with these small red dots, let me just show them, they're closely aligned. So here is one, and here is the latest one. Gives us the target of 60 or even here 47. You see it in the upper left corner. Here's the target, also the price target from this top indicated, which is using 47, which is just a quick one. 47, I mean, you know where 47 is, which is at that point in time, that target was generated somewhere here. We have never come down to this low here. So in regards to price, this downward projection, it is still in place, number one. second has never reached. So even if we time-wise have now passed this into an upward cycle where we are today, indicated by this dot here, price-wise, this downward swing has not been confirmed to be complete. So, and second, if we want to see a confirmed upswing cycle of this leg upward here, we would have needed a crossing here at this FLD, what we have not seen. So at that point in time, once we would have crossed this FLD, this upward cycle projection would be valid. But as you see from the FLD, price moved near close to this and then pushed back in the downward. So we have now two conclusions from that reason. First, this top was confirmed by price crossing below this FLD 0.1. Second, this generated a downward price target here, not time-wise, just price-wise, around 47 something, yeah? Never reached. Second, the time-wise cycle has switched already to an upswing, but this would have required a crossing above the FLD, which did not happen. So we can conclude from that view, and that makes the combination of these techniques right interesting, because we want to detect the possible shift of a projected bottom to the left or to the right, because the cycles are not perfectly even. That's what we know, and we can now use the combination of these two techniques to get a clue if a bottom or possible top has been in place. By reading that, we know this downward projection has not been confirmed price-wise, and the upward cycle, which is indicated by the pure time-based analysis, is not confirmed. So we should be very, very careful calling this an upswing cycle projection here. That's what I just wanted to tell you first, but for sure, Lars, what do you tell us? So what's now you need to go further. So again, let's remove that. Let's to make it more easy, let's also remove this FLD here, and let's get back to the full view of this cycle. So the second thing, if you look more closely now to how this cycle looks like, you can see and spot a very interesting pattern here. Once you have a perfect alignment, let's say this top and this top here, so here we have a perfect match. And then you see it's always not one cycle until the next low is coming. So then you need to count to the secondary low, which is then the main cycle. So counting from here, you need 1, 2 cycles to roll forward until the next low is coming into place, which is here. And then again, you need 2 cyclic swings to complete to the top. So 1, 2, which is here, exactly here aligned. So then you need to count additional 2 cycles to complete until the bottom has been reached. So 1, 2, which is here. So then you can again count, you need 2 cycles to complete, or at least 1, 2 here to this cycle count. So you see a pattern here, which is giving you this cycle, which is a little bit overlaid here in that chart. And this is double of the cycle which you have seen here. So it might not be detected as easy from the dominant cycle scanner, as this would now give us a cycle length of, let's zoom out here again, let's remove so which means that the more interesting dominant cycle pattern from a daily perspective seems to be a cycle length of 364 multiplied by 2. But what I'm now doing is, let's keep the cycle here and let's adjust the FLD against this cycle length. So now we can use an FLD exactly with this cycle length here, because it's half of the real dominant cycle. So let's again activate the FLD. And now let's change the length of this FLD to double that number. So as we have seen from the visual inspection, that there is seems to be a cycle in place. So this is now what this chart shows us using the FLD with a length of 364. And I've explained why to choose this one. So now let's have a closer look at that point here. And here again, based from this long-term cycle, we have validated, which has not been seen from the cycle scanner per se, is that we see here, let me even make this more easy. Here we have the interesting crossing of price below this FLD line. And if you really zoom in, there was a real close like a magnet. So the FLD worked like a magnet line. Price is following the FLD, what you often see. So there's no clear decision-making process. But at least the latest point was here. So now we can, I mean, there's no discussion on it. We crossed this FLD to the downside, which means by crossing this FLD, so price is crossing below the FLD, we have confirmed this top here. Yeah. So what we see here is that by this point, and you see it's out of sync from this is anyhow half the cycle. So this is not the long-term cycle, but by this point in time, we have a confirmed long-term cyclic bottom projection in place. And again, we use now the same technique. We can roll over this indicated crossing, and you see in the upper window, it automatically shows you the possible cyclic price target. But yeah, it's as simple. It's just measuring the distance from the last top until this point here. So it's just measuring this distance and then adding this or subtracting this from price to give you the price indication to the downside. So this is really a tough downside target here. Now we can indicate where it is. I would not count it as to the number, but it is somewhere here. Yeah? So that's the downside target, which was given at this point in time here. That's a price target, not a time-based target. So in addition to that, it gives us also the indication that by this point here, we have passed half of the cycle. So only in terms of length, which means there's a lot room to go until this cycle reaches now the possible bottom projection. So we need to address, and I will just make this here visually. So just somewhere here might be a possible low at this, and that, by the way, is the second low of that here. So it looks like from that long-term cycle, there's still room to move to the downside based on the, just counting this visual inspection here by using FLD, dynamic cycle analysis, combining it to get a clue on adjusting cycles more to the left or to the right, so the left translation or right translation of cycles, which we cannot detect by pure time-based cycle analysis alone. So it's really helpful, but I would call it still experimental. I think no one has combined these two techniques in that way. But let's also add the other perspective of the weekly prices, right? So this was just a way using the daily analysis, which means it does not seem that a low might be in place. So therefore, let's switch now to weekly oil price data. I think I have stored a workbook at least to get this starting point better here. Yeah. Okay, so this is a weekly. It's just the weekly series. You see it here in the upper left corner. So you should be able just to load this weekly oil price series on your own. And then again, as I'm combining here different techniques, I'm using more historical data for this cycle analysis. As I'm not looking at the exact phase timing of the projection. That's always the point in time when you are kind of allowed to use more historical data. So let's deactivate the cycle first. So this is how the spectrum looks like. In that case, I would not pay too much attention to individual peaks here. We just use our AI-guided reading of that spectrum. It's not quite too hard here. So it has chosen the cycle length of 145 weeks, which is clearly indicated as rank number 1. Dominant cycle. You could also explain it by the shape of that cycle, but I would not go into the depth of why this cycle is the most dominant. So let's just activate it. You see from the behavior of this cycle on the chart, which is quite okay with possible tops and bottoms here. So the cyclic is in alignment with past moves, not perfect. So therefore I would be careful. And here, the same as we had on the daily. So the pure time cycle projection shows us or indicates a possible low, like similar to as we just used the daily. The daily already just from the time cycle projection switched to the upward swing. The FLD then in addition showed us that the downward push seems not to have ended yet. So here we have a similar situation. The weekly suggests that we are arriving at a possible bottom and the next upswing phase of this cycle could start. Now let's include the same as we did on the daily. Let's combine Hurst FLD technique with the dynamic time cycle detection with digital signal processing. So we standard procedure 145. Let's activate just the plot of an FLD. We use half of that cycle length here, which gives us approximately 72. And this plots our FLD. So let's zoom in to make this view a little bit more clear and zoom in the current situation. So here we have the green is the FLD shifted forward in time, half of the dominant cycle. The dominant cycle is here also plotted as a forecast here. And now let's pay attention to how to read this cyclic projection. So here we have the final top, and here we have now the crossing of price below the FLD, which just recently happened in May, so just last month, which means we have a confirmation of this cyclic top, that this cycle is in force, but just recently, which we can use now, and you know how this works, to derive price target indication, which just measures the distance traveled from here to here and apply this as a downward price projection, which is 20 something, quite low. So I don't want to pay too much attention to the price target. I'm just using it for what I'm using here to derive the left or right translation of this cycle. So I'm not really paying attention to the absolute price projection. But you see, there's a lot of room until we have completed that downward cycle. So even if the time-based projection indicates we are at the bottoming phase of that cycle, just paying attention to the time or the phasing of this cycle where we are now, if we would have a regular shaped theoretical cycle, we would arrive now at the bottom. Just looking at the price and the price projection, there's a lot of room to go to the downside until this downward swing or the final phase or the last half of this downward cycle has completed. So we need to be careful not to roll over too quickly to the upside or go long, because the price projection to the downside is still open. Second, and here again, as we can use this cycle to measure now the distance traveled. So the ideal low would be here, but we would now measure from here to here, which gives us the timing. Can apply the time from left to right, so which gives us early next year. And I think that's exactly the same as we have derived from doing this manual on the daily chart. And that's now the outlook here. So the weekly also confirms that the downward swing of the confirmed top, we have a confirmed cyclic top, but the downward phase is not completed yet. So it looks like we have a right translation of the theoretical time-based projection. And that is the same output we also have seen on the daily, which I wanted to indicate today. So, and that's how I use the combination of these techniques. I'm not really paying close attention to the absolute price projection or to the absolute projected low or top of the time cycle. I'm just using the combination of these techniques to come to the conclusion that the downward phase in oil has not been finished yet. I mean, and that's enough what we need from a market analysis perspective, not looking only at the time cycle, so I would not call it a bottom yet. We could see and should see from this cyclic analysis more downward momentum in oil. But, and bear with me, this is an experimental combination of these two cycle analysis techniques. I think there's no scientific historical verification of this approach. So the Hurst FLD concept is there, has been used more on static cycle frameworks. So we anyhow use dynamic cycles to apply FLDs. And we use our dynamic time cycle and phasing approach to derive possible tops and bottoms in the markets, and now use the FLD as confirmation and to see if we have reached or ended a possible cyclic swing yet, to get a better or valid background information if the next projected bottom, or the same would apply for a top, could be confirmed, or if it still needs more time to come, which is exactly the maybe missing key we need in cycle analysis, because the Fourier or time-based analysis never gives us a real clue if we have a left or right translation of possible cycles. We only can detect this after the fact, but which gives us no real advantage if we are looking at the right side of the trading chart, right? So therefore, the concept of FLDs could give us this additional information, what price has traveled. And in addition to analyzing time, we are analyzing the cyclic concept of what price has done in this cyclic leg to get a clue if price has traveled enough. Based on half of that cycle, we can measure what the second half of this cycle should give us for traveling price. That's it. So don't count it as an absolute projection from time or price. It's just a combination of these two techniques. I will pay more attention to this while we go, but I wanted to push this idea out. I mean, this is why Cycles TV is here. Let's discuss some new ideas. I will now pay some attention to your questions. Let me check. I can bring them in. So feel free to push in your questions now, at least for the next 5 to 10 minutes. I want to discuss it here. Maybe Michael, interesting comment. I have had success using Elliott wave principle in conjunction with digital signal processing. Thank you. And I think what you did here is the same idea, right? So you use digital signal processing for the time-based approach, or cyclic approach. And then Elliott wave principle is using patterns in price movements to confirm if a possible price target has been reached based on the Elliott wave. At least if you use Elliott wave for the price-based patterns. And that sounds very, very interesting. So instead of using the FLD concept for analyzing price, you have put in Elliott wave principle, which gives price targets. It's perfect. I think Elliott wave is a very complicated procedure. But it's a similar concept you're trying to do, and I would support that way if you know how to apply Elliott wave. For me, to be honest, until today, it's kind of mystery how to do Elliott wave analysis the right way. But if you know how to do it, I think it will be a great concept of combining Elliott wave, price-based Elliott wave patterns with digital signal processing for time-based predictions. Okay. Yeah, I think you outlined it. Sorry, I have not read through all of your comments. But Michael, correct. I have had success using Elliott in conjunction with DSP, gives the rough timing, but Elliott wave and its guidance gives the framework to hedge as required. Exactly how I tried to summarize it. Good idea for everyone who wants to combine Elliott wave or can dig into it even more. Ta-dum. Maybe, and then your topic, FLD cross few times on weekly. If you use the top from crossing targets, gets much shorter and maybe more accurate if you use the top from yeah, we can have a real, I'm not quite sure if I get your question correct, but I think this is the weekly still here, which I have open here. And you're relating, at least that's the topic we need to highlight here. So the FLD has been crossed more than once. This is what you are mentioning here, and that's correct. And we can zoom in here to have a more closer view on that. So it has first been crossed to the downside here. Then the week after already crossed above again. So then we have here a downside cross, upward cross, and the final downward cross here. So that will impact the timing projection. You're right. So it depends if you measure the when has half of that cycle been completed, at the first crossing, which could be here, or at the second crossing, which is here. So I think the projection of the price would be more or less the same, as the situation when this has been crossed to the downside. Price-wise, is no big difference, but time-wise, so we're talking about, has it been December 2022 or has it been May 2023? So this is a possible range you should put into place. So what I would recommend, Alan, at that point in time is, so it gives you a range. So the first possible target is the first crossing, which is measuring from here, December, the distance, which is a shorter projection into the future. So just visually, let's just do it very, very roughly, which means the first crossing took place here, measuring to this top is this shorter period, which is then, you're right, so this is the shortest possible. And the second is measuring from here to here, which is then coming to early 2024. So just using the weekly is giving you this window, just using the concept of FLDs, where you could expect maybe the bottom to take place. So in the second half of this year until early next year. That's just a rough how I would read this window from the weekly series here. But again, so starting in the second half of this year, and then it's at least the right translation here. So this bottom should come here, maybe just if you use a theoretical cyclic projection. And thanks for mentioning this. And now you get more and more into how to combine these two techniques. So your comment is absolutely valid. Thanks for pointing that out. Maybe just also valid question, if you're a new starter to this analysis, what does DSP and EVP mean? It's just the abbreviation for DSP means digital signal processing, which we are using here to applying to the price or the asset of oil here to derive time-based cycle analysis, where we get our spectrum plot to use then to decide which cycle to select. That's digital signal processing using different concepts, but it's mainly rooted in the Fourier transformation. Not as simple as just Fourier, but if you want to read more on that, it's the Fourier-based DSP. EVP is Elliott wave principle, which is most engineered and favored by Prechter, which was also here on the channel. And it's a pattern. So they are searching for patterns in price movement to derive what is the next wave of the cycle price, which needs to be completed in regards to mainly price targets. And yes, you could also use cycles for individual stocks. You just need to be careful. If you pick specific stock, you need to be sure that there's enough volume in trading for this stock. So if you just pick stocks which are more influenced by random movements or individual news, I would not recommend to use cycle analysis. So for example, Apple would be a great stock. You have a lot of volume in this stock. If you use just small companies with just low volume, don't use it for analyzing individual stocks. So another question, the pre-config cycles in the dashboard are almost mostly in 1,200 bars. Is this similar to, yeah, I think if a little bit extended, so I want to get the best balance between not using not enough data, yeah, but also not too much data. So this is more personal opinion. I think 8,500 is the lowest possible. I would never go below that, or at least cycles above 300 days or 300 bars could not be detected. So I would call this the minimum offset. Maybe 1,200 or 300 or maybe 1,800 would be the maximum, yeah, to use if you're interested in the timing of this cycle, not only the length. So 1,200 is more or less the medium in between, which I would recommend to use. But yeah, it's okay. And Steve, you also extended your question. So if cycle analysis could be used, what data points need to be considered? Open, low, high. This is too specific. I use just an average, use the close. You could also use the low or high because we are anyhow not doing price projections. And if you're using low or highs, you should not just switch in between. You could use the open series or the low series. I would assume that the cycles detected would not really deviate if you use the O or open or the close, or use a combination and average the difference between the high and the low and just use half. There are different methods to maybe average the price indication from these 4 series. Yeah, and you can do it intraday for sure. You can go closer to 5 to 15 minutes. I would just be careful if you're new to cycle analysis. Become confident what is going on daily analysis, because in intraday series you have more and more noise, so it gets more and more complicated to really read a spectrum. And second, you don't have so much time to read it, because 5, 10, 15 minutes afterwards cycles could change. So it's really fast moving cycle analysis, which you should only do if this more or less goes automatically in your brain. If you need too many time to do the analysis, you should not do it intraday in fast-moving environments. Okay. I know you're always interested in other assets like Bitcoin or copper. I don't have a view yet, but I will take your suggestions for one of the new weekly shows. So even if I can't do it now and today because we are running 40 minutes already, I will keep your recommendation for one of the next shows. So it's always good to be here. So maybe last topic for today. Aren't we getting the same answer for daily and cycles because we are using the same cycle? Yeah. So I've not done the math, but exactly that's how you do it. Maybe we've just analyzed the same cycle from a daily perspective and a weekly perspective. The good part of it is also using the FLD, which is then a little bit different with the length, gives us the same confirmation. So yes, we have analyzed one key cycle, and that's the good story, Brent, which has been found on the weekly and has been found on the daily. We have analyzed the interaction of price against this cycle by using the FLD, which we have used trying to get a clue on, has this cycle move already been reached its price target, yes or no, and how much time did it took from the confirmed top. Both gave us the indication that this cycle swing to the downside has not ended. So I would call it an analysis, right? And the main key was also to bring the idea across. This is what we want to push cycle analysis forward. We are not here to repeat what has been written here and there by different researchers in the past. We want to push the boundaries of cycle analysis. And it's just, the techniques I showed here are quite simple, but the power maybe comes to the table if we're able to combine them. That's why we are here. This was just pushing at the idea that's experimental. Take this into account, but at least you now have something new to try out on your same. Thanks for joining me today. I would like to see you next week. Leave me your comments. I will always pay attention to it. Hope to see you next week. Same place, same time again. Take care. See you. Bye.